$870 million. That's the size of the Solana staking unlock, scheduled for next week. If you hold SOL, you've seen the warnings. Supply shock incoming. Sell before the dump. Protect yourself. And a lot of people listened. In recent days, retail traders sold 3 million Solana tokens. $470 million. Gone. To protect against a number that hasn't hit yet. The question isn't whether the unlock is real. It is. The question is, who's on the other side of that trade? The unlock fear is not irrational. Every time a large amount of locked capital becomes liquid, the instinct is the same. Supply goes up, price goes down. That's basic economics. And it's correct, sometimes. But there's a pattern in crypto that gets missed almost every time. Not the unlock itself, the anticipatory selling before it. When retail traders expect a dump, they don't wait for the dump. They create it early. They sell the rumor. They liquidate the position. They remove themselves from the risk. And in doing so, they create the exact conditions that longer horizon capital needs, without either side coordinating anything. Let's look at the data. Evidence A, the institutional counterflow. While retail sold 3 million SOL over the past week, Solana institutional investment products recorded their strongest positive flows. This month, 155,000 SOL, $12.8 million, net inflow over the same window that retail was exiting. Two different types of capital, two completely different interpretations of the same event. Evidence B, the mechanics of unlock fear. Here's what actually happens with large unlock events in practice. First, not all unlocked tokens hit the open market. A significant portion of validators who unlock simply restake. They don't sell, they recommit. Second, the capital that does want to sell doesn't need the unlock date to do it. Large sellers move through private OTC channels, not public order books. Historically, many large unlock events see far less on-exchange dumping than retail expects. Third, and this is the structural point, the fear of the unlock causes more selling than the unlock itself. Retail exits early, increasing short-term supply on exchanges. By the time the unlock actually arrives, often much of the sell pressure has already been priced in. Evidence C, the ETF signal. Solana spot ETF applications are currently pending approval. This matters for timing. Institutional players with 12-month horizons are not operating on a 7-day unlock fear cycle. They are positioning ahead of a structural catalyst, a potential ETF approval that would open Solana to an entirely new class of capital. The unlock may be short-term noise. The ETF thesis is a longer-term structural catalyst. Think about the asymmetry here. A large institution needs to buy $100 million of Solana. If they try to do it on the open market, quietly, without moving price, they have a serious problem. They need liquidity, deep, available, liquid supply. When retail panics and sells 3 million SOL into the order book over 48 hours, that's liquidity. That's not manipulation. That's not coordinated. It's just two different time horizons colliding. Retail is trading the 7-day fear. Institutions are building the 12-month position. They don't need to engineer anything. Different time horizons are enough. The unlock isn't the event. The anticipatory sell-off is the event. And by the time the unlock actually arrives, a shift in supply from short-term holders to longer-term holders will already be underway. So what do you actually watch? Not the unlock date. Watch the restaking rate after the unlock. If the majority of unlocked SOL goes back into staking, the supply shock narrative collapses. Watch institutional fund flows in the 10 days following. If inflows continue to accelerate after the unlock, that tells you who read the event correctly. And watch exchange reserve data. If SOL on exchanges stays flat or drops after the unlock, the dump was already priced in before it arrived. The unlock isn't the story. The story is who was on each side of the anticipatory sell-off. You already know what retail did. Now watch what the patient capital does with it. Decode motive or become liquidity. Market signals, structure over noise.